So welcome to Mex Moves, our weekly podcast on Mexico business and finance. How are you, Eduardo?
Doing well, Damian. Thank you. How's everything?
Good. So this week we have a great interview with Rodrigo Velasco. Rodrigo is the Mexico country manager and LatAm head for BBVA Spark. That's BBVA's tech banking division that basically provides financing services and credit to companies in the tech ecosystem. We'll hear more about exactly what it does from Rodrigo. And while I think we can talk this week about the S&P moving the Mexico's sovereign outlook to negative. We can talk a little bit about the business delegation to Canada and some announcements of investment in Mexico. One that seems a little bit dubious, as we'll discuss. And then GAP, the airport group based out of Guadalajara, and with also having the Tijuana airport, had its investor day, which I thought was interesting. And then some analysis on the first quarter numbers out of the listed hotel companies, tourism hotel companies in Mexico.
Sounds good. Shall we start with the S&P, which was big news?
Sure. So you would have seen that S&P reaffirmed Mexico's rating at BBB, which is 2 notches above junk. But they moved it to a negative outlook, basically meaning that if there is a change in the rating, it's more likely to be down than up. Even if they bring it down a notch, Mexico would still be investment grade. And Mexico's investment grade with the other rating agencies, with Fitch, where it's actually just 1 above investment grade, and Moody's, which is 2, I think, and HR Ratings, which is 3 above investment grade. So it's not a downgrade, but it is a warning sign. And I think the message from S&P was, slow growth, higher budget deficit than planned, and kind of growing contingent liabilities to the sovereign from Pemex, I meant to say, could lead to trouble down the road unless the government takes appropriate action. And I think the finance ministry responded with its own press release. It was kind of a slightly funny press release, given the news obviously was the move to a negative outlook. They celebrated that S&P had, initially at least they celebrated that S&P had affirmed Mexico's BBB rating and said that shows, how well Mexico is doing, which obviously wasn't the story of the day. The investment banks kind of waded in, JP Morgan, among others, sort of put out reports saying, JP Morgan, at least in their case, saying that they sort of agreed with this and it didn't come as a surprise. Mexico's deficits are wider than had been planned in the budget. And clearly growth is much slower. So the finance ministry is assuming growth over 2% for this year. The private sector economists are all around 1%. So growth is slow, as we've talked about. And Pemex. I think the government did a very good job at sort of stabilizing Pemex's finances last year, but they did that not by engineering any sort of material operating turnaround at Pemex, but by throwing a lot of money at it. Some off balance sheet, some on balance sheet from the federal government, and unless there's evidence of an operating turnaround, then logically they're going to have to continue to do that, and that would hurt the sovereign ratings as that money is effectively coming from the federal government. So that's where we are. I think it reflects the reality of Wall Street, which is Mexico's situation is relatively stable. It's got many things going for it. It's more or less an independent central bank. It's got a very strong banking system. It's got the benefits for now of free trade with the United States, but there is fiscal slippage. There's no evidence of a sort of tax reform on the horizon. And Pemex in particular continues to consume a large amount of federal resources in the absence of a major sort of operating turnaround at that company. What did you make of it, Eduardo?
I think S&P, like you said, is doing a warning shot to the Mexican or giving a warning shot to the Mexican government that its situation is not pristine, perfect, however you want to call it or determine it, but that if it doesn't change course, it will suffer a downgrade. I think the time frame for that would be 6 to 12 months. If I recall, that's how long rating agencies take after they make a change in the outlook of a country or a company. So, and I don't think it looks like there might be any changes in direction in the Mexican economy unless there is a surprise with the free trade agreement that gets renegotiated on time or reviewed on time. That would be a very positive thing for Mexico. We're getting closer and closer to the deadline. So if that doesn't take place, all the other elements that are that S&P mentioned in its press release will unlikely change, and Mexico will, I would say, will most likely suffer a downgrade, which will, like you said, keep it up in the category of investment grade, but it will no longer have any cushion, or any further cuts will put Mexico in the junk bond status. Even though Hacienda celebrated, they need to have some ace under the sleeve to make that celebration be worth it. Now, having said all that, many analysts had predicted that Mexico would be downgraded much sooner than it has. So the Mexican economy is chugging along, as one would say. But again, another warning sign on the horizon that might make this potential downgrade more feasible than before.
That's right. In fact, Marcelo Ebrard, the trade minister, the economy minister, is quoted today saying that he expects the USMCA review, not to be resolved on July the 1st, and that we're likely going to be moving into recurring, possibly annual reviews over the next decade. So we're going to get a kind of dynamic USMCA, but dynamically uncertain, let's put it that way. And so, he's clearly preparing the ground for there being no deal, and that the scenario of going back to the table every year, which gives the US leverage, seems to be more likely than not, given his comments and other comments that other people have made, and just a sort of logical read of how Trump likes to do things, which is keep everyone on their toes all the time. There was on the issue of growth, which I think is perhaps the kind of issue of the year right now. If we were to do sort of Google searches, probably Mexico growth would have gone up a lot versus previous years. There's a very good article in Nexus by Alejandro Werner. As our listeners will almost all know, Alejandro was former deputy finance minister of Mexico. He was former head of the Western Hemisphere of the IMF, sort of basically Latin America and the Caribbean, and he's now at Georgetown University. Anyway, he sort of talks about the reasons behind the growth, and the first problem he addresses is political concentration. That in his view, Morena's project of consolidating power through Congress and electoral institutions, judiciary, is incompatible with a pro-growth agenda, as it discourages investment and lowers productivity. And then his second issue is ideology. He thinks that Morena, although things have improved, continues to distrust the private sector and is sort of tied to a state-led development model, which doesn't work. And uses sort of Pemex as an example of that, how US production, Brazil production has all gone up and Mexico's has gone down. And then technical capacity or expertise, a lot of stuff has been poorly handled over the last 6-7 years. And then he highlights lack of competition policy, which hurts productivity. So it's a pretty damning piece by, I think, one of Mexico's most respected, albeit in the eyes of Morena, no doubt, neoliberal economists. But he also says things are getting better. And talking to people closer to the government than I am, especially in the infrastructure sector, I get a sense that the government is responding quite urgently to the lack of growth by as we've talked about in previous weeks, opening up infrastructure and energy and especially electricity to private investment. So, good article for people who read Nexus. I recommend it. So if we move on to the next subject,
I do too.
So there
Damian.
was a big delegation last week into Canada, 200 or so businessmen. And Ebrard, Gonzalo Ebrard again, announced to quote him, he said, "We ended the day with a $2 billion investment for Hidalgo. That alone made the entire mission worthwhile." End of quote. The investment he was referring to was was one announced by Solar International Corp Canada, or SICC, who signed a memorandum of understanding with the state of Hidalgo for a $2 billion active pharmaceutical ingredient API plant in Zapotlan, and paying $70 million for land, and apparently going to create 1,700 jobs. Anyway, what I found interesting is that I went to their website, and there's very little. But first of all, though, it's a holding website. It's not a website that's finished. You'd think a company that's going to invest $2 billion could spend a few $100s on a final website. It says still coming, and then some generic text. Secondly, there's nothing in that text about other API plants, product pipeline, no financial statements, no major pharma partners, no FDA track record, blah blah blah. So it'd be quite unusual for a company to invest $2 billion in something they've never done before. The company appears to be sort of between Canada and Oman in the Middle East, and it has apparently at least some investments in the Middle East, but it's not a well-known company. So I think without knowing much more about it, and that was just a few minutes of sort of digital due diligence, I think we can treat this particular investment with some degree of caution. I'm slightly surprised that Ebrard kind of announced it with so much fanfare without maybe perhaps doing more diligence on the company itself and its track record. And to be fair to Ebrard, the newspapers and the agencies, the Canadian newspapers, Reuters and so on, all kind of reported the $2 billion. But it always says up to, so we could argue that Mex Moves is going to invest up to $2 billion in the Mexican podcast ecosystem, and wouldn't be, strictly speaking, inaccurate information, even if it might be a bit misleading.
Interesting. Yeah. I mean, again, Damian, this shows how desperate the Mexican government is for good news or new decisions on investment in the country, which haven't come forward as clearly as they did in the past. So this might or not might happen, like you say, but it again shows a little bit of desperation. If you ask me about how they are looking forward to any good news. There is a lot of rumbling in the Mexican political world in some of the indictments that the U.S. government unsealed a few days ago, 2 weeks ago. And so that has concentrated the conversation. The economic negative elements that generates might also be forcing the government to try to switch the conversation and concentrate on what's positive. But then again, this investment might not happen, or if it happens, it will be smaller than it has been planned. And we've covered so many times the announcements that companies made in the Mañanera not to be fulfilled, or to be just rehashed of previous announcements that companies have made. So I guess it shows how Mexico is desperate for good news. And like you said, with the Alejandro Werner piece, he clearly states what are the main issues that are disconcerting foreign investors or local investors. And those are the issues that have not been addressed by the current administration, despite trying to do a lot of things in cutting red tape, in announcing new projects. Things have not panned out the way they thought they would, and it's unlikely that they will unless they change a few things a little bit more dramatically.
Which I wouldn't say dramatically, but they're definitely changing things. I think there is a significant shift or pivot, but it would take time to attract investment. But I suspect that this particular investment isn't going to come through in the way that it was announced. At least even $70 million for a plot of land in Hidalgo, it strikes me as unlikely without having full information on it. So if we move on to GAP, the airport operator, they held their investor day. Interesting, they held their investor day in the CBX, the Cross Border Express, the bridge between Tijuana Airport and San Diego. And I actually was on it a couple of weeks ago, and I've used it many times. It's brilliant. And GAP is kind of also pivoting as more of an infrastructure platform around its airports rather than an airport operator. As you remember, we talked about this before. They bought CBX from the controlling shareholders of GAP. Diaz Barroso, Laura Diaz Barroso, and others owned CBX, so they bought it from their own controlling shareholders, and now it's fully merged and consolidated and so on. They also announced a FIBRA, basically a Mexican REIT, which is going to be buying minority interest stakes in the airport and giving money. Therefore, it's basically, as I understand it, sort of financial engineering, the point behind the FIBRA, which is the government changed the way they regulate tariffs for the airports so that if you have lots of leverage at the airport level, it's punitive. So what they're doing is they're putting equity into the airports through the FIBRA operation, which is equity or considered equity, and then leveraging up at the holding levels to ensure they get the best possible tariffs. I don't think there's a logic behind it beyond sort of as a regulatory arbitrage, as it were. And they've got lots of land around CBX, which they're probably going to be developing. And even though the airport part of the operation is a bit soft because cross-border travel is not very good, there is, there's lots of opportunities from all these ancillary services, hotels, industrial parks, the bridge itself, and so on, to help offset the weakness in the passenger traffic.
That's interesting. I hadn't heard that much about that refinancing or financial vehicle you mentioned with the REIT, Damian. It's interesting and clever, I would say, from their part. So we'll have to keep an eye on that and see how it works for the company overall, so that they could still put equity but then get leverage through the REIT. I think it's a clever way of overcoming some of the regulatory elements that are put in place. So we might see that happening with other airport groups, I would suspect, as GAP has maybe shown the way of how to overcome certain limitations on how much debt they could have. So we'll have good kudos for them in their engineering and capabilities of finding ways to continue following their model that they have in the past.
Yeah, but ultimately it's the passengers that pay these higher passenger fees. So if their strategy enables them to have higher tariffs, then that's not necessarily great for the average passenger on a Mexican airline. And with higher oil prices around the world, including in Mexico, and shortage of jet fuel, we're going to be seeing we are seeing higher airplane prices. So good for them, good for their shareholders. It's perfectly legal, but it's not something at a personal level that I necessarily celebrate.
We already pay very high fees in Mexico for transport. So maybe the authorities are also gonna find a way to be smart enough not to let GAP get away with higher tariffs for us, but that they can grow their other commercial side of the business.
Yeah, but remember that the airport fees are pretty high in Mexico, and the margins of the airport operators of the listed companies that we can see are 70% plus. So they're already extremely profitable. So moving on, there was a story in White Paper that owns this podcast in their daily Substack, which I recommend to everyone in case you don't subscribe to it, about how the tourist focused hotel groups in Mexico, basically Hotelero Santa Fe, Posadas, RLH Properties, all reported pretty bad first quarter results. So for Hotelero Santa Fe, operating cash flow was down more than 30%. Posadas, EBITDA was also down about 30%. RLH, which is the Fernando Chico hotel group, their revenues were down sharply. Operating profit was down 44% in pesos, I think, and EBITDA like 60%. So there are a lot of different reasons for this, but I thought I'd look into it because the note struck me as something I hadn't really focused on. So, I mean, the first thing is that there are fewer passengers fewer foreign passengers coming to Mexico. So less tourists are coming right now. So in the first quarter of the year, depending on how you look at it, but roughly foreign passenger traffic was down maybe 3%. And as all these hotels have pretty high fixed cost structure, any kind of decline in demand hurts their margin. Secondly, the peso, as we all know, continues to be super strong despite all the issues in Mexico. So it averaged about 17.50 to the dollar, 17 pesos 50 in the first quarter from 20.40 in the first quarter last year. And basically all these hotel tariffs, especially at the higher end, are in dollars, and most of their costs, or a big part of their costs at least, are in pesos. So that squeezes your margin quite a lot. And since you're competing against Florida or Punta Cana or other destinations elsewhere, you can't really put up your prices in dollars to affect that. I think you had the security shot in the first quarter with the Mencho's killing and then the subsequent violence. I think that was especially problematic in Vallarta, but also I think it hurt the whole of Mexico tourism. Cabo a little bit, maybe Cancun less because it's further away. You had some one-off issues, especially with RLH. They were remodeling the banyan tree, and in Mayacoba, there was a remodeling the Four Seasons in Mexico City, which is part of those numbers. And so, they'll probably bounce back when those remodelings are open. Some people say that Mexico's not the cut or the elimination, basically, of tourism promotion in the U.S. by the Mexican government has been an issue. And then I think finally in the Cancun, some people say that the sargassum problem, the seaweed problem, is putting tourists off both visually and the smell, maybe hurting. So we've been talking a bit about how Mexico tourism, which has historically been kind of very strong and growing very fast, has been on a sort of soft track for a while. But this is clearly first quarter when it comes to the hotel groups was a challenging one. I would say from the point of view of profitability, it was mainly the strong peso, but the other issues haven't helped.
And we have the not so great news that Deloitte and Touche, if I recall correctly, that was the one that did the report on the World Cup not generating as much interest as the government had mentioned, and we covered it in past podcasts. So the outlook for the hotel industry might still be bleak for a few more months ahead, Damian. And like you said, if the peso keeps the way it is, their margins get squeezed. And Mexico is not as cheap as people might have thought, and the word goes by, and that probably has not helped and will not help in the future. Not that we are encouraging for a peso depreciation or anything like that, but it's a reality. Now that I've been living abroad in a very expensive area of the United States, Mexico doesn't look that cheap either. So visitors might be trying to find places where their dollars run a little bit further than Mexico, and we are beginning to see it in these numbers that you just mentioned from all the hotel chains, which attend a whole variety of type of customers, from high end to business to middle end. And if foreign investment is also not happening or not pouring in Mexico as it used to, that means less business travelers coming to the country and so on and so forth. So not that we want to be very bleak, but things are not looking promising in that industry as well.
Yeah, I mean, we'll definitely get a strong numbers related to the World Cup, because the Deloitte argument was that the overall economy won't see a big boost, but there will be benefits in certain sectors, but then other sectors won't benefit. So you'll see a rebound of sorts. But ultimately, the World Cup is only in 3 cities. It's and with flight costs going up a lot, and booking flights to Europe for the summer, and they're going through the roof. Obviously, I suspect that at the margin, a lot of tourists will stay closer to home, and that could also affect Mexico negatively. If people say, let's go to Florida, not to Mexico, or Europeans say, let's go to Spain, not to Mexico. So, I mean, these are all issues that we'll find out about. Second quarter will, especially up June, will probably be okay. But then I think then the third quarter, some of these factors will come back into play. So if we wrap up on some quick takes, Eduardo, BUNQ, which is a Dutch neobank, it's in 30 countries, applied for a banking license, a full banking license. They say they're the largest neobank after Revolut in Europe, so they're pretty big, and they're very much focused on digital nomads. So it's getting, as we've talked about before, but it's getting pretty crowded, the fintech business, because I'm sure Revolut is also going after the digital nomads, of whom there aren't that many to begin with. And you obviously have Nu, which probably wants them as well, and then we have Plata and Klar and Story and a bunch of others, and plus the incumbent banks that all have very, very strong digital products at this point. So they're coming in. Interesting that they didn't buy a license. There's a bunch of licenses for sale right now, and they decided to go greenfield for whatever reason, and we'll see what their business model is. It would, based on Plata, based on Revolut, it will take them 2 or 3 years before they get their license. So it's going to take a bit of time.
On my end, I have for those that love car racing, SICC, Corporación Interamericana de Entretenimiento, the company that organizes massive live events. They announced that they will invest $12 million in remodeling the Autódromo de los Hermanos Rodríguez, looking to upgrade it to the new standards that the Federation of Automotive Car Racing has installed for this year. So the racetrack will have a new pavement. There will be a few more renovated elements. And that will keep it going, as you know that they signed a contract to host the Grand Prix in Mexico for 2 more years after this year. So that's something that's taking place in the sports arena. Again, the industry there keeps on chugging along.
So there was a big telco event in Mexico, the M360, which pretty much everyone in the telco world goes to. Danny Hash, the CEO of America Mobile, was there. Monica Aspe, the CEO of AT&T Mexico, and all the other telco operators and suppliers. The main sort of theme in the newspapers was Hash in particular and AT&T complaining about how expensive spectrum is in Mexico, and that it's used as a tax tool rather than a tool of digital inclusion. And as a result of that, there's some estimates that, because spectrum is so expensive in Mexico, that 5 million people have been kind of cut off from the digital economy, because as a result of expensive spectrum, internet cost is too high as well. So another thing for the government to grapple with, which is if they want to digitalize the economy, then spectrum costs have to come down to international levels. And the last auction for spectrum was basically deserted because the operators prefer to use their existing spectrum than pay what the government wanted. So they're not even raising additional money from making it very expensive, because if people don't turn up to buy it, then obviously no money's being made.
Good, and continue with telecom sector. I don't know if you saw, Damian, but probably at that conference, América Móvil announced that they were worried about inventory of smartphones, so they're boosting their acquisition as the prices of memory chips in those devices has gone up from 80 to 90%. So they don't want to be caught without any inventories, and they are beginning to acquire more smartphones for their clients to be ready for them when they begin remodeling or repurchasing a new phone. So that's an interesting aspect the war for chips around the market, that it might impact also telephone or smartphone device makers. And the Mexican company América Móvil is already getting ready or taking advantage of what it is out there to avoid having to increase the prices of what they have more than the consumers can take in Mexico.
And Braskem Idesa, which is the polyethylene subsidiary of Braskem Brazil, and Idesa, which is now controlled by Inbursa, is heading into further financial trouble. So they've already stopped paying their bondholders. They posted horrific first quarter numbers, negative EBITDA, despite having invested about $5 billion in the Polyethyleno 21 plant in Veracruz. And utilization fell 30 percentage points because Pemex isn't giving them enough ethane, which was the original sort of logic behind this massive investment, the largest ever private sector investment in Mexico by some measures. And at the same time, their financial troubles mean that they haven't been able to buy easily sort of feedstock imports to offset the Pemex shortage. So they are already been negotiating with their 2029, 2032 bondholders, but now they're looking for kind of dip financing, emergency financing tied to a Chapter 11. Be interesting to see if Carlos Slim, which through Idesa owns a 25% stake, but he also is said to own some of the debt of Braskem Idesa, whether he steps up to the plate and seeks to take control, but he's certainly going to be a pivotal voice in how this ends up. It's a sad end to what at the time, 10 years ago, was a sort of landmark, iconic in investment, taking advantage of what people thought would be plentiful ethane by Pemex. And in the end, that ethane didn't materialize. In the end, they had to renegotiate their contract, Braskem Idesa, with Pemex and pay higher prices than were originally agreed to. They had to help build a terminal. They had to import from the US. And then in addition to all of that, you have a difficult petrochemical cycle for polyethylene, and it's spread over ethane, and all of that has led to this sad end. But the plant is still there. It's obviously not producing as much as it should be, but at some point, it will be recapitalized. Perhaps new owners will take over, and I'm sure it'll come back, but a lot of value has been destroyed in the meantime.
Finally, for me, we started with S&P putting Mexico on negative outlook on the corporate world. S&P also downgraded a few days ago Grupo Televisa from BBB to BBB minus, which is the last ranking in the investment grade status. The reasons behind was greater competition, loss of revenue, and market share in some of the segments that Televisa operates. This comes at a tough time because Televisa has been mentioned as being one of the top bidders maybe for AT&T's telecom operations here in Mexico. But the situation, financially speaking, according to S&P, of the company has deteriorated over the past few months. And therefore, it deserves a lower rating from that rating agency.
Great. So shall we move to our interview with Rodrigo from BBVA Spark?
Let's do so.
So it's a real pleasure to have on the podcast today Rodrigo Velasco. Rodrigo is the head of BBVA Spark for LatAm and also the country manager for BBVA Spark for Mexico. How are you, Rodrigo?
Great. Thanks for inviting me, Damian. Good to see you.
Likewise. Thank you for coming on. This is Rodrigo's first podcast.
Yes.
So, Rodrigo, BBVA Spark is the bank for the tech system in Mexico, in our case for today, but also for Latin America, Spain, Europe, and other parts of the world. Tell us a little bit why you think it needs to exist. I mean, BBVA itself, which owns 100% of BBVA Spark, is a perfectly very, very strong bank, the strongest bank in Mexico, obviously. Why does BBVA doesn't have BBVA Real Estate or BBVA Food? Why do you have to have Spark?
Great question. I think not only BBVA, but all banks, like the traditional model of banking usually focuses on some key financial metrics. No, at the end, I think companies that are very techy, high growth, and disruptive have a different business model. So you need to have a different approach towards risk and towards service for this specific sector. No, that's why we created Spark. No, almost a bit more than 3 years ago, and there's like a clear mandate to only service these kind of companies. No, we're a division within BBVA to service these high growth and disruptive companies.
And why don't you tell us what the main products and services are of BBVA Spark?
Yeah, first make it clear, like we operate as a bank. We're part of BBVA, and the transactional part is key to what we do. We provide and we cover companies from very early stage to more mature late stage companies. So at the beginning, it's mainly a transactional relationship where we provide from opening the first bank account of an early stage companies to then become the partner and the transactional partner of some of the more sophisticated companies, providing some of the traditional products, but with a touch of technology, no? And we use a lot of API connectivity with most of our clients, and we have built even like custom-made things for different like high growth companies.
And other services, I mean, obviously, you in addition to doing the payments and the traditional sort of banking services for tech or disruptive companies, you also lend money to these companies.
Exactly, and that's probably like that's the more sexy part. That's what usually like hits headlines and what people are aware that we're on the lending business, and it's definitely a critical part, but it's not everything. We also take deposits from these kind of clients, no? So at the end, we are the bank partner of this ecosystem, and lending is an angle, but it's actually we only do lending with a few select group of companies within our coverage, no? That is relevant as well to say.
And from your website, you do broadly speaking, two types of lending, right? You do structured lending, and you do sort of venture debt, let's say. Can you describe a little bit about the type of structured lending you do and how big it is in Mexico, and then the type of venture debt you do, and which is more relevant of the two types of lending?
Exactly, we have two flavors, no? Venture debt and warehouse facilities or structured lending. On the venture debt, this is an unsecured structure where we have like an equity kicker or an equity enhancer, which could take the form of phantom stock or warrant. In this case, this kind of structure is something we have done much more in Europe and to a lesser extent in Latin America. In the case of warehouse facilities, contrary to what most of the people could think of, we have done much more structured lending in Latin America and less venture debt. And the warehouse structure, in essence, is asset-based lending. No, we put an SPV in place and we put some the receivable, etc., and finance against that kind of receivables. No, these are very very interesting structures that provide us comfort to do these kind of deals.
And what's the rough size of the loan book? I saw on the website for all of BBVA Spark, including Europe, was about €1 billion, I think. What percentage of Mexico would that $1 billion be on the credit side?
We have compromised close to €1 billion globally, and Mexico, I can say, is a very relevant part of that. Between Spain and Mexico, we're the largest geographies, and to a lesser extent, Colombia and Argentina, which I also cover out of here. Growing, but still a small part of the portfolio. We don't share like geography specific details, but I would say like Spark in a nutshell and like more holistically is the largest operation of BBVA Spark globally.
Mexico is the largest.
Mexico, yes.
I saw a press release, I think it was last week, that you lent $40 million to Habi, the Colombian prop tech that's grown outside Colombia. What kind of, just use that as an example, what kind of lending was that? That was structured lending against real estate?
Structured lending against real estate, yes.
Okay. And then I saw on your website you have a testimony from Quesky, the buy now pay later player in Mexico, based in Guadalajara, saying how wonderful BBVA Spark was and so on. Will you presumably you there do structured financing to buy now pay later to help them lend to the end client?
Yeah, we do provide a structured lending to fintech, and it's also relevant to say we're sector agnostic. Fintech, it's obviously roughly 70% of the monies from VCs in the region goes to fintech. That's why there's obviously a tilt toward that, but we're sector agnostic. We cover all sectors, and in Quesky in specific, for example, we help them with lots of part on the transactional part, collections and everything, using, for example, APIs. So we're very, very close to Quesky and other buy now pay laters as well. With Aplazo, we're also working. We have a facility with them as well. And many other players. Not all our deals are public, but out there you can read many examples of companies we have been partnering and helping them.
And you don't invest directly in any companies on the ventures with your own balance sheet, but you do invest in venture capital funds that invest in these companies. You're an LP in effect of a lot of the top venture capital funds in Mexico and in the region. Why are you doing that? Why does it make sense for BBVA to use its balance sheet to invest in venture capital funds?
The partnership with funds, I think it's critical. As a bank, we can only do our part in terms of like helping them with credit. And I think it's critical for companies as they scale and grow to have also a strong balance sheet in terms of equity. So still at its early stages, the VC ecosystem, the private equity ecosystem, it's still growing and maturing in Mexico in particular. So I think to be close to that ecosystem is helpful. And we also want to have partners with who to exchange like point of views on their portfolio companies, etc. So we work with them very closely. Obviously, the financial part, the financial aspect of these investments is relevant, but even more so, the strategic angle of actually being close to these funds that are on the equity side. So we don't have the bandwidth, obviously, to do that. And at Spark, we don't do direct equity investments, but that's our way to also be in the cap table of many of the high-tech disruptive companies.
And what would be your typical ticket in a sort of local VC fund as an LP?
It ranges from a couple of $1 million to a bit more. It depends, but we haven't disclosed as well the numbers. But it is something like we're doing in LatAm and as well in Europe. And I think it's a relevant part of the recipe, to be very close to this ecosystem.
And are they the main sources of the companies that you then lend to, either asset backed or not asset backed, or actually is it direct approaches from BBVA Spark?
Both, but it's a big chunk of them are VC or private equity backed for sure. Although it's there's not any like constraint not to work with a bootstrap company, for example, but most of the cases are definitely within this VC-backed structure.
And as a significant LP in a lot of the VC funds, how would you sort of characterize the venture sort of capital ecosystem in Mexico? Since you also cover all of Latin America, how would you compare it to other countries in the region?
Yeah, still growing. I think like on the early stage side, I think there are a handful of funds where we partner with and that are very strong, like very sophisticated teams, etc. They cover their part, as I said, like on the seed or Series A, even they are covered by them. But we do see some gap between them and more of a private and the private equity, no, per se, no. So we see an opportunity for some funds to actually come in at the growth phase, no, because from these funds, from the VC funds to the general Atlantics of the world, I think there's still room from other players, and it's critical, but because that's the stage where they need tickets on the equity side from $20 million, and I think some of the international players still are relevant in filling that gap.
I mean, some people say that Mexico's tech startup world is sort of less vibrant than Colombia's or Chile's or Brazil's. There have been very few, if any. I don't think there have been any IPOs of Mexican tech companies, unlike the rest of the region. I mean, do you agree with that? And if you do, to some extent, why do you think Mexico hasn't yet given birth to a local tech company? Because if you for example, in fintech, one of the big Mexican fintechs is Nu, and that's Brazilian. Another one is Mercado Pago, which is obviously Argentine. I mean, why do you think Mexico is slightly behind the rest of the region?
Yeah, I think we started like later in time, and I think there's a very strong pipeline. I think it's a matter of time. It will happen. No, the companies are scaling, maturing, and I'm sure we'll see some good equity stories in the years to come. Very confident that it's a matter of timing, and the entrepreneurial ecosystem in Mexico, I think it's also very diverse in terms of different nationalities. You just need to go to a Condesa and walk around, and like you hear all kind of languages, and you see a lot of Chilean, Colombian, Peruvian, Argentinians. It's also we have a massive market, no, bigger market than all of the other like LatAm countries, with the exception of Brazil, that it sets themselves apart. But from the others, I think you see more and more families coming from those countries from the south to live in Mexico, and I think that gives us also a lot of relevance for this part of the world, no?
And do you expect some relevant tech exits? Because there haven't been many, which would obviously benefit you as an LP and some of the VC funds.
We will see them. It's obviously outside of anyone's control, no? And it depends. There's a lot of factors into that, but we're also always like trying to find ways to help out the liquidity of entrepreneurs and of VCs, etc. Part of the reason we just announced a partnership with Nasdaq Private Market, no, which actually helps companies on their liquidity programs, and I think it's an interesting interim phase between an IPO and having nothing, no. So liquidity means like for a founder or for some of the management team that have equity stakes to actually be able to sell part of their stake to buy a house, no, as an example. And there's not like then there's not a rush to actually do an IPO today. You can do it and plan accordingly without letting go the cash and the liquidity component, which is also always very valuable for everyone, no?
So on the Nasdaq association, what is BBVA's role in that? It's just introducing companies, that straightforward?
Straightforward. We help them connect with Nasdaq. Nasdaq has the global platform that connects buy side and the sell side, and our role is to help them with an intro and along the way, with anything, but it's really help them become and understand more the the companies and the dynamics of the region. No? At the end, they're a global company, and in LatAm we have such a relevant presence that we want the companies from our territories to go and understand what are the opportunities as well on these kind of platforms.
And it's both companies and funds. Funds can also do secondaries.
Yes.
How does, beyond earning hopefully at least a very attractive return on capital, how does BBVA Spark help BBVA beyond the financial metrics?
Super critical. I think Spark as well, in a way, works as the innovation hub for the bank. No, so there's always like two-way approach for any problem within a big institution, and there's always the route to do it yourself and build technology from scratch or on top of what you already have, and there's a second alternative of partnering and working, collaborating with an external player. No, and I think part of our work is help the internal divisions of the bank, help them analyze what are the opportunities out there for them to contrast and actually decide what's best for each case. No, so on the mortgage business, on the car business, on the car lending business, etc. Like we're always in touch with the different core businesses of the bank to help them just analyze what's out there, how can they do something that doesn't necessarily mean like building something technology in particular from scratch. No, so we're helping the bank in this, which I think is critical in times where things are moving so fast and not necessarily, even if we have a super big operation, in many cases it might make sense to partner with a player that is very niche and has like a super granularity on their business. That could be super helpful for the companies.
And are there any active examples of a company that's come through Spark that you've seen a technology or a product that would make sense for the BBVA group, and you've introduced them and it's been adopted and BBVA group is kind of better as a result of that?
Yeah, for example, with Conecta, for example, which is an aggregator, no, on the payment side, for a product that was launched by our embedded finance team, we actually launched it via distribution by them, not by Conecta, no, and we at that moment we made a press release, etc. And it's a great example of how can a BBVA product can actually be distributed by a third party, in this case as a BBVA Spark client, no, Conecta, no. So this is an example of how we can collaborate with the startups, and I think we're super open to explore these kind of partnerships. Obviously, companies that aim to work with us need to have some degree of maturity, obviously, to be able to withhold and to work with a bank of our scale. But it's something that we take very serious, and our job is to put all these opportunities in front of the business owners inside of the bank, and for them to decide what's best for the bank. No, at the end, we only come along with them during the process, but they have the final say. Obviously, the final say comes from the business owner internally.
But you're constantly seeing tech companies. I mean, do you also help BBVA kind of understand where technology is going and how it could be affecting the banking system, like a kind of think tank almost?
It works both ways, no? Either a startup comes and we think it's interesting and we actually bring the case to the bank. That's one. But the other way is also the bank and some divisions from the bank can say, oh, well, we have the problem or we need this. Can you go out there and see like if there's a startup that can help us with this? So it works both ways, and I think it creates great dynamics internally in terms of like always being or at least trying to be ahead of the curve, no?
So let's say that I run a tech company and I want to open up my bank account with you, do payments, have APIs with you, maybe get some structured finance, maybe even some venture debt. What would you ask me, or what would you look for? What would be the factors critical for you to deciding whether to do business with me, apart from having a minimum size?
For us, people is super critical, so we take the personal due diligence like very, very highly. So we usually spend a lot of time understanding what's behind the companies in terms of like the persons, their history, what they have done, what are their plans. We get to know all the C-suite very well, no? So I would say like the personal due diligence from our side is something super critical, because we're here for the long run and behind companies. And if you see stories from successful startups, there's a common denominator, that it's people that are building. Sometimes things don't go as planned, etc. But it's the same people that come again and again and again with new companies. They pivot, etc. But they were these persistent minds, the brave ones that keep coming back. These are the persons that we want to actually partner with, no? So that's why the person side of the equation, aside from the Excel and the PowerPoint part of the equation, is something we take very seriously.
And how do you do that? I mean, you just talk to them, you get references, you hire a corporate investigation firm.
No,
I mean, because no one's going to say, like, actually, I'm a bit dodgy. You don't want to give me any money. But, I mean, most people are going to say they're great. So how do you go about, like, deciding that they're a good
I think,
person?
like, at the end, we sit with people, we get to know them, we know that their teams, not only the C-suite, we go to the companies, we sit with different people, we try to understand what they're doing, also understand their past, etc. And we try to connect actually even outside of the office in a more social way. And at the end, like, I think the puzzles get solved themselves, no? You and it's obviously far from perfect, but is definitely better than trying to originate with an Excel spreadsheet by itself. No? Usually way better.
And do you presumably, okay, so you've got the people, you look at the technology, of the nature of the problem they're solving. What other factors would you look at before you decide to onboard someone?
Yeah, I think there's a lot of analytical rigor behind what we do. No, obviously we would look at the projections and the numbers and the spreadsheets, but all the projections and many things, and if we look at the margins in one specific year, etc. Like, it will be very difficult to say, this company is good or bad because of this margin at that point in time, etc. No, what we do think is like more binary, is to understand the problem, the size of the opportunity, and how can this company like actually help bring this problem down. No, and I'll give you an example. Like, we put everything, all the numbers into perspective. No, like, we like to zoom out and really think, how is this market growing? How is this company gaining market share in this market? So the full picture is super critical, and it's kind of funny, but you would see like lots of companies out there, not only private but public companies, that are at some point celebrate and throw confetti out if they grew 7% when the market grew 10%. No, so at the end, with these kind of like super basic things to understand the market dynamics, the trends, the addressable market, these parts are an essential part of what we do. No, understand the big picture, the dynamics, the trends, and how can this company falls into that trends. No, so that will be another relevant part.
And when you decide here in Spark to give credit, warehousing credit, or whatever it might be, is the underwriting confirmed or approved by BBVA, or do you have autonomy over your own balance sheet?
No, everything is within the local balance sheets. No,
The Spark balance sheet.
yeah, Spark balance sheet is within BBVA's balance sheet.
But my question is, does it have to go out to BBVA, the final credit approval, or do you have autonomy to lend?
No, we have our internal delegations, etc. But at the end, everything is through the BBVA. We have our own risk team, and we are and dedicated teams that are like more used to analyzing companies through different analysis. But at the end, everything falls within the BBVA umbrella. No.
And just finally, where would you like to take BBVA Spark LatAm Mexico over the next 3 years? What are your targets, your ambitions, your hopes?
Well, I think there's still a massive opportunity to keep growing on both sides of the equation, on the transactional and on the lending side. The real competitor right now, I think it's our foreigners. No, in general, like we don't see any local bank targeting our companies, and we would love to see other banks as well participate, because we think there's a market for everyone. The bank has always been at the forefront of innovation and technology. It happened a decade ago with the app and with the technology of the bank actually being a fintech before the buzzword fintech existed. No, and I think this might be another example of the bank actually betting for this ecosystem that needs like something very specific that is differentiated from the traditional side of the business. And a big success would be to actually these companies should move to corporate and investment banking within the bank. No, that will be like a huge success to actually like help these companies scale. And in years to come, they shouldn't need our division to service, no, because they will be like a more traditional company, no. So we'll part of the mission is to help them scale, and when the time comes, they can be served by another part of the bank. It just makes us a more comprehensive and holistic bank out there, no.
And how do you feel when people say BBVA will end up competing with these companies that you're financing? I think BBVA moved into used car financing quite aggressively, right? Again, presumably competing against Kavak. Do you feel that there's some kind of tension between helping out these companies and then eventually maybe competing with these companies? Or do you take a kind of Google mindset that it's better to keep your enemies close and fund them?
No, I think there's no tension. I think it's a learning opportunity for both sides. And we do, as I said, like sector agnostic, and we do a lot with fintechs, but we would love to see more healthcare or insurance or other parts of the economy. At the end, I think it's super complementary, and it's a win-win for both sides of the equation. And for us is to be so close to this ecosystem that it's such vibrant and full of energy, and with all the things moving as quickly as they are, not only with AI, which is obviously part of that disruption. In general, we love to see entrepreneurs and people that are like not distracted, but that have a very clear plan to actually help in some way in the economy. And we like to be a partner to these people that are like super intense in problem solving.
Do you have any AI sort of first companies? I mean, everyone uses AI at this point, but companies where AI is their central product?
We have a few. No, we have a few. At the end, most of our companies that are like either PropTech, FinTech, or healthcare, and they are using AI, not actually creating AI per se, no. But I think we will see definitely more. And even in the AI era, I come back to the point that it's persons will continue to be protagonists in the AI world, and we're super motivated to be part of the story of many of these companies that I'm sure will actually ring the bell some point in the years to come.
Rodrigo, thank you so much for joining the podcast. Been a pleasure talking to you.
Great, Damian. Thank you for inviting. Take care.
Thanks, everyone. That's it for this week's Mex Moves episode. Hope you liked it. Please review us, share us, and we hope to have you back next week.